Hey, what's up, traders? We're going to take a look at GBP CAD and we're going to look at the Commitment of Traders report. For those who are unfamiliar with what the Commitment of Traders report is, it is a document that is submitted to the United States government from the large institutions and banks. They tell them how many longs and how many shorts of each currency they're putting in. And then the United States government relays that to traders like you and I. I'm going to show you how you can access it and how you can actually tell how many longs and shorts that these large institutions are putting in. And you can use this as Confluence when you are trading. What do I mean by Confluence? Extra confirmation. So if you're thinking about selling a pair and you look at this Commitment of Traders report and these large institutions are also selling that pair, that can help you in understanding if you should sell. So I'll show you exactly what I'm talking about. Let's deep dive into it.
Yeah, I know I got problems, and I don't know where to go.
So guys, this is the Commodities Futures Trading Commission. This is the government site I was telling you about, and I'm going to show you how you can access it. Now, if you were to go to cftc.gov, it will take you to this place here. Right when you get to this place, you're going to scroll all the way up to the top in the middle where it says Market Data Economic Analysis. Scroll down to where it says Commitment of Traders. As you do that, scroll down to where you see Current Legacy Report. And then on the second column, it'll say Chicago Mercantile Exchange, and then click here where it says short format. Now you'll see a whole bunch of information right here, and this is all what they provide for you. So what I like to do on my computer screen is click Command F for find. And if I want to see how many longs and shorts that the big institutions have for the CAD or the Canadian dollar, I'm just going to hit CAD to find it. I'm going to hit the enter button and look, it highlights it right here. So in short, for the non-commercial, the large banks institutions have currently 25,000 plus long contracts for the CAD, but they also have 78,000 shorts. So they're hedging. They have some shorts and they also have long. However, they have more shorts than long. So ultimately, they have more short contracts to the downside for CAD. Now, we don't just trade one currency, we trade a pair. And remember, we're going to be looking at GBP. So I'm going to type GBP. In GBP, they have, here's their long, here's their shorts. They have currently 99,000 long contracts, but also they have 65,000 short contracts. So they have more longs and shorts. Now, ultimately, you want to put all of this together, right? Because you're trading a pair and you want to see how many shorts and longs that they have combined. And that will tell you if you should short this pair or long this pair. One thing that I like to do is look at this changes report here. And this tells me how many longs and shorts that they've exited or entered from the previous week. That also is going to help me to make that determination. Now, this looks like a lot. So I like to use a website here called Bar Chart, and it makes it user friendly. So I can simply look at GBP right here. This is their net change. So currently they have more shorts than long. So they have negative 8,462 shorts. So GBP, they're looking to short. And then for the Canadian dollar, they're looking to go long overall. So it can be a little confusing, but just bear with me. Let's take a look at the chart. And before we use this, let's just look at price action. Okay. So for GBP CAD, I'm on the daily time frame. And the reason why is because I want to see what the overall structure is. So overall, we've been trending up higher, making higher highs and higher lows. Then we had a decent pullback right at this level here. And then we started to make higher highs and higher lows again, consolidated and hit this peak right here. So to clean up my chart, I'm going to show you exactly what I see here. We're currently at a supply level. And what do I mean by supply? I'm going to draw this rectangle here. And I like to do this with my students. It's just simply telling you that previously, and if you look at the timeline all the way here at the bottom, this was of March 2025. So let's circle it so you can keep up. And then right on this side, we have June 2025. That's where we're currently at now. Today is July 1st. And we can see how this is a supply level. Typically, when price has been tested at this level multiple times, we can say that, hey, price will be dropping. So I'm going to put supply, AKA surplus. This helps you to understand, right? And you can also call this a double top. A double top pattern is when prices come from an uptrend, buyers peaked out, sellers came in control, buyers came back up, peaked out, and we can almost predict that price should be dropping. When we trade, we're trading two currencies. I'm going to put a line right here. We're trading, in this case, the Great British Pound and the Canadian dollar. Now, let's go back to bar chart. And bar chart says that the Great British Pound has negative 8,462. So let's go back to the chart here. Now I put it on this side here for GBP, and I'm putting it down here just to let you know that this negative number tells you that the big banks and institutions have more shorts than they do long. So I'm putting this arrow here just to serve as a visual aid. If you're enjoying this right now, I want you to hit that subscribe button and that like button. Hit that thumbs up. That really means a lot to us. It simply gives other traders the chance to find this channel, to learn just like you. I truly appreciate that. Just takes 2 seconds, even if that. And feel free to drop a comment if you have any questions. I'll be sure to respond to you. But once you do that, we'll get you right back to the video. All right, just waiting a few more seconds. All right, here you go. Let's go to the Canadian dollar. Let's go back to bar chart. And now the big banks and institutions shows that they have more longs than shorts. That's why it says net, because they have shorts and longs. But this week, they've entered more longs. So I'm going to put a positive 13,166. So this tells us that the big banks and institutions have more longs than shorts for Canadian dollar. And now what I'm going to do is put an arrow pointing down here as well. The reason why is because when we're trading two currencies, because Canadian dollar is the second currency, longs is pointed this way, okay? Because the Great British Pound is the first currency, longs will be pointed this way. However, they have more shorts, so I'm pointing it down. Okay, so everything is the opposite when the currency is on the right side. So what I mean by that, the Canadian dollar have more longs. It's opposite. Longs for Canadian dollar means this way. If it had more shorts, shorts will be this way if this was a negative number. But because it's a positive number, it's this way. So now you can see how both arrows are pointing down. And in this case, I'm saying that the large banks and institutions have more longs for the Canadian dollar, in this case pointing down because we're trading both currency pairs, and this is the second currency of the pair, and they have more short for the Great British Pound, which is pointing this way. So when you have two arrows pointing down, the big banks, large institutions are going to be short selling this pair overall. And I know this could be confusing. We have a Commitment to Traders report course for a lifetime in Discord. And if you look in the description of this video and also in the comments, I'll post it in the comments just in case you're interested, where we break this down in simple terms and not in complex terms. But because this is a YouTube video, I want to make sure I hit on the important topics, on the important points. But again, if you're interested, feel free to join our Forex course or our Commitment to Traders course, where we break this down to a molecular level. So what I'm going to go ahead and do, I'm going to add this 13,166, and I'm going to also add this at the negative 8462. So math is slightly different when it comes to this Commitment to Traders report, because we know that these are both pointing down. So if I add these, you'll get a 21,628, negative 21,628, because we have ultimately, we're going to the downside. So I'm going to just put this here for reference, and we're going to put a negative 21,628. And guys, trust me when I say this, I've been studying the Commitment to Traders report for a few years now, and this is 99% accurate. Now, you can use this for swing trading, meaning that you can be in the trade for a while. You can use this for intraday trading, but you also want to couple this with price action. You don't want to just get in and say, hey, because the big banks and institutions are shorting, I'm going to short at that particular time. You want to use price action. This is why I use price action in the beginning. Remember, a double top simply means that a reversal is coming for the most part. And you can see price has already rejected it. And if I get my measuring tool from up here to here, already about 118 pips or so. So overall, we're going to have maybe some pullbacks and so on and so forth, maybe a retest. But overall, I believe we're going to head to the downside. And I think around this level here is a safe level to take profit. And I'm saying around 1.8390-ish. So around that level, and it can take maybe several days, maybe a week or two to do that, but just be patient and trust the process. So guys, at this point, go ahead and like this video, subscribe if you haven't already, and share this video. We teach new and struggling traders how to trade with structure and guidance. And it's rare that we use indicators. We simply use price action, and we use data from the Commitment to Traders report, and we only sell at discounted price. And we only buy at discounted price. This is our supply level here. We teach you how to read these charts because supply and demand rules the entire market. It doesn't matter where you're at around the world, supply and demand rules the market. If you can find and identify these levels, you'll be golden. If you already have a foundation of trading, the Commitment to Traders report will add that extra confidence in your trading. That being said, guys, like and subscribe if you haven't already, and I'll see you in the next video. God bless.
Starting with you.